Hello viewers, welcome to my channel. Today I have the pleasure to introduce you to an important concept called cash budget. Cash budget is an important financial tool being used by many organizations in planning on their cash receipt and cash payment for a defined period of time. Now, that is to say that cash budget informs business managers on when there will be cash shortage so that appropriate arrangements can be made for loans or other credit services so that there can be efficient operation of business activities, and to also ensure that there is money in the organization to manage the business operations. Now, today I'm going to solve with you two practical questions on cash budget, part 1 and part 2. This video is part 1. The link to the part 2 is in the comment section of this video. Now, before we progress to the questions, I would like to introduce you to the general format for preparing cash budget. So as you can see on the screen, we have the first item is a cash receipt. So if you make cash sales or you receive money from your credit customers or any other source of income, you have to record it under the cash receipt. After which you sum everything to get a total cash receipt. After getting the total cash receipt, you then progress to the cash payment. That's where you pay utility bills, you pay your suppliers, you pay your workers, everything. So those things will go under the cash payment. After listing the various payments under the cash payments side, you then sum it to get a total cash payment. After getting the total cash payment, what you have to do is to subtract the total cash payment from the total cash receipt. Now, you either get surplus or deficit. If the cash receipt is more than the cash payment, you get surplus. And if the cash receipt is less than the cash payment, you get negative or deficit. After that, you add the opening cash balance. That is the cash with which you start the month with. Now, after adding the opening cash balance, that is what will give you the closing cash balance for the month that you are preparing the cash budget for. Now, one important explanation here is that the closing cash balance for January becomes the opening cash balance for February, because from January we move to February. Likewise, the closing cash balance for February also becomes the opening cash balance for March, in that order. So that is how cash budget is prepared. And mind you that this is cash budget, hence expenses such as depreciation, bad debt, provision for bad debt, all those items are not included in the cash budget. So now let's move to the question and then read through the question before we progress to Excel to demonstrate how to solve the question. So here is the first question. The data below relates to XYZ Limited. The following sales are expected to be made in the next 5 months: March, April, May, June, and July. Inventory purchases will be as follows. Historically, 60% of the sales are received in the month of sale, and the remainder collected in the month following the sale. All purchases are on credit, and suppliers allowed 1 month credit for payments to be made. Other expenses are as follows: operating expenses, salaries, utility bills, miscellaneous expenses. All these expenses were paid in the month they were incurred. 6. 5% of each month's sales will be paid as commission to sales agent. All commissions were paid in the month in which the sale took place. Cash balance on 31st March is estimated to be $11,000. Required, prepare a cash budget for the 4 months period from April to July. That means that March is not part of the cash budget, but we are preparing from April to July. So now let's progress to solve the question. Now, after reading through the question, the first thing you have to do is to extract your data. Data here, we are referring to extracting from the question the sales figure for each of the months and then the purchases figure for each of the months. That is what will help you in drawing your cash budget. So we'll be referring to the data as we are preparing the cash budget. But in some questions, they'll give you every information you need about the sales figure. But in some questions too, they'll just tell you that the sales figure is this, and then the purchases figure represent a percentage of the sales figure, or margin on sales is so and so percentage. We will look at that scenario in the second part of this video. So now let's move to the cash budget. So like I have here, what I'm going to do now, I'm going to write about each of the months. So the first month, we are paying from April to July. So I have April. Then from there, I'll move to May, then June, and July. Now, what I will do is that I'll write here my cash receipts. Yes, after getting the cash receipt, now let's take the questions one by one as we solve it. So the question is saying that historically, that's the third item. Historically, 60% of the sales are received in the month of sale, and the remainder collected in the month following the sale. So it means that for each of these sales, 60% are collected in the month in which the sale took place. Then the following month, the remainder is being collected. So because I want you to follow, I'm not going to use the Excel to do this 60% calculation, but I'm going to use my calculator. And then if you are writing on a board or in a book, you can also be calculating it on your own. So the first thing to write is cash sales. That represents the 60%. So the cash sales for April, that's the 60% of the 42,000, as you can see on the screen. That will give us 25,200. Then we move to May. 60% of the cash sales for May also will give us 33,000. Likewise, when we come to June, 60% will give us 37,200, and July, 60% of that sales will give us 39,000. So it means that for each of these months, 60% will be received from each of the months. Now let's move to the remainder. The following month, the remainder will be collected, which is the remaining 40%. So we have our debtors or our credit customers, money that we are going to receive from them. So in April, remember that 40% of the sales for each month will be collected in the following month. So 40% of March sales that we made here will be collected in April. So in April, we are going to collect 40% of March sales. So 40% of 28,000 will give us 11,200. Then 40% of April sales will be collected in the following month, which is also May. We will have 16,800. Then that of June, 40% of May will be collected in June. So that one we have 22,000. And by progressing, we move to July. Then 40% of June sales will be collected in July. And that one we have 24,800. So after, I think, yes, now we are done with all the receipt. After finishing with all the cash receipt, all that we have to do is to get the total of the receipt. So I will write my total receipt. And because of time, I'm going to use the Excel calculator to just sum it for each of the months. So if you are using a book or a board, just use your calculator and then calculate it if you cannot cope with the Excel calculation. So Yeah. So we have the total receipt now. After getting the total receipt, then we move to the payment side. So we have cash payment. Now, looking at the cash payment, that's where we make the payment to our suppliers and then the other expenses. So let's look at the question again. Inventory purchases will be as follows. Then when we look at the IV is saying that all purchases are on credit and suppliers allowed 1 month credit for payments to be made. So it means that when you buy an inventory for this month, you are going to pay everything in the following month. So coming to our data, whatever purchases that were made in March, the money will be paid in April, and that of April will be paid in May. So we have our creditors or our suppliers. We are going to pay our suppliers in each of the months to come. So March purchases will be paid for in April. So we have 20,000 that we are going to pay here. Then when we move to May, April purchases will be paid there. So we have 23,000. And likewise for June, we are going to make the payment for May in June. And July to the payment that we make for June will be, the purchases will be made in June, we'll be making the payment in July, which is 30,000. As we can see on the screen. Now, from here, we then move to the question again. Other expenses are as follows, and all these expenses were paid for as they incurred. So we have operating expenses. Each month is 13,000. Salaries, each month is 6,000. Utility bills, each month is 4,000. And miscellaneous, each month is 3,000. So first of all, we have operating expenses. So each month we have 13,000. So because of time, since each month is 13,000, I'm just going to use my Excel to drag it and then write it on each of the months. Then moving on, we have salaries. They pay salaries as well. So looking at salaries too, each month salaries paid was 6,000. So that one too, since it is constant for all the months, I'm just going to drag it for each month. The next expense that will be paid include utility bills. So I'm going to write on utility bills. And each month, the utility bills paid, as we can see from the question, is $4,000. And then the miscellaneous is 3,000. So we now go back to our Excel. The utility bills for each month is 4,000. So that one too, I'm just going to drag it since it is constant for all the months. The next expense is the miscellaneous expenses. And the miscellaneous expenses each month, the payment is 3,000. So I'll just drag for that one as well. So we are done with the other expenses. So now we progress to the next number, which is question number 6. 5% of each month's sales will be paid as commission to sales agent. All commissions will be paid in the month in which the sale will take place. So here it means that 5% of each month's sales will be paid as commission, not 5% of the cash received. It is the 5% of the sales. So we are going to calculate 5% of April sales, that of May, June, and then July, and that will be the commission for the sales agent. So by using my calculator, I'm going to calculate the commission. So that of April, I have 2,100, and that of May, I have 2,750. The commission for June is 3,100, and that of July is 3,250. So now, after we are done with the commission, let's look at the question. Okay, it seems we are done with the cash payment because the next item is about the cash balance. So now, after we are done with the cash payment, we have to sum everything. So likewise, I'm going to use the Excel calculator to just sum it. You can use your scientific calculator to do the same thing. Yes, so now here is my total payment. I'll just underline it nicely. Yeah, so after getting the total payment, like I was saying, the next thing is to subtract the total payment from the receipt. So, and that will give you either surplus or, into bracket, deficit, meaning the deficit will be in bracket. So here too, I'm going to use my Excel calculator to subtract the payment from the receipt. Then I'll just drag it for all the months. If you are using calculator, you have to manually subtract it for each of the months. Yes, so we can see that April is having deficit, May is also having deficit, whereas June and July are having surplus. Now, the next thing is to add your opening cash balance. That's the cash with which you use to start the month. Now, looking at the question, we have cash balance on 31st March is estimated to be $11,000. Cash balance on 31st March is estimated to be $11,000. So now from 31st March, we move to 1st April. So this balance on 31st March becomes the opening cash balance on 1st April. So when we move to our cash budget, we have the opening balance. Opening balance for April becomes that $11,000. Now, after adding the opening balance, then we have the closing balance. The sum of the two will give you the closing balance. So I'm going to use my Excel to sum these two. So the closing balance here is minus 700. Yes, so like I was saying, this side I want you to understand. So I'm not going to use Excel calculator to do the movement. But I was saying that the closing balance for April became the opening balance for May. So I will then write minus 700 as the opening balance for May. After getting that, what I have to do is to add the opening balance for May to the deficit that we have for May. So I will add it. Then this amount, I have minus 2,650. This amount then become the opening balance for the following month, which is June. So we have minus 2,650. So we have to add that one too. Okay, likely we have a positive closing balance. So now this closing balance for June then become the opening balance for July. So we have 450 as the opening balance for July. Then we then sum that one to and get a closing balance for July. Yes, so here is the end of our cash budget. All that we have to do is to dress it nicely. Yes. Yeah. So here is our cash budget with regards to this question. Yes, important things that you need to remember is that non-cash items don't come here. Depreciation and bad debts and those stuff does not come here. Now, if you have questions or something that you need explanation on, write it on the comments section. Write it at the comment section, and then I will gladly respond to it for you. And remember to like the video and subscribe to this page for other videos. If you like to look at the more complex questions, watch the part 2 of this video, as I will upload soon, and then I'll put the link to that video in the comment section of this particular video. Thank you for watching.